and not do anything. Even those who talk about it some of the time, they really don't even know what to do, because all they know how to do is get their salary and spend part of it, and occasionally I'll save a little bit for the rainy day, putting in a savings account where the interest rate is just that much, and that's it. When you talk about financial planning, can you explain what should we be talking about here as an expert?
Financial planning is the process of setting financial goals, and it is not only for the rich, it is for everybody. The moment you have some semblance of income coming in, you need to plan for that income. So whether you're creating a spreadsheet as a budget, or whether you're even deciding to save for your child's school fees, or whether you're deciding to save for a rainy day, right, it is all part of the financial planning process. So what you actually end up doing is either breaking up those funds into little bits and pieces.
But that would seem like a lot of hard work. If you're earning 100,000 and you now have to create a spreadsheet of I bought a
that word is scary.
Not necessarily. You can even do it on a sheet of paper.
Spreadsheet.
No, well, okay, yeah, but you can do it on a sheet of paper, right?
So I earn 150,000 naira a month.
Then keep 10%. Put 10% aside. It is financial planning because you're saving. You've set yourself a goal for a rainy day. What you're doing is for that 10% that you want to put aside, you've decided that you're either going to need it in 3 months' time, 6 months' time, 10 years' time, you're putting it aside. But the whole point is try to do it regularly, not on the whims and caprices of when you feel you have them. Because somewhere down the line, you are going to need money beyond what you're currently earning.
So 10% is a prudent percentage.
It's a starting point.
Okay.
I mean,
it can go up.
It can go up. I mean, some people get bonuses every year. The whole point is try to put some of it aside. The government has been very graceful recently that, they've set up the pension scheme, so everybody's putting some money aside. But what you tend to find with that occasionally, sometimes it's not even enough when you retire. So the whole point of financial planning is also plan for that rainy day somewhere down in the future.
Okay, so how soon should one start putting away money, planning for the future?
ASAP. Children, as soon as they're born, when you're doing the naming ceremony, money is given, gifts are given. The point is put some of that money away. Students who go to school get pocket money, right? Adults, the moment they start earning, right? Yes, you have the daily grind to go through, but the whole point is also try to put some of it aside. And you need the right products and the right institutions to actually manage these funds for you.
Okay, well, there is the Yoruba saying, I will not bother to go into the detail of it or even say it in Yoruba, but what it translates to almost literally is that what you don't have, you cannot spend. And the implication is when you put money in a savings account, you have access to it. You can go there. If they say something is wrong with one's child or some family member, you very easily go in and put your finger in and get some money out. Now, what should be the kind of investment that people should put their money into that ensures the level of security of that fund for when the rainy day comes, not before it?
Just like we started with financial planning, you set the times and goals for what you actually want to do with that money. Now, if you need it over within a period of, let's say, 1 month to 3 years, then you put it in shorter term instruments. If you need it, let's say, over about 3 to 5 years or beyond, then you put it into medium term instruments or products. If you need it over the long term, assuming you're saving for a child who's going to university 18 years down the line, then you can put it in longer term instruments. And there are various products which you can.
So those instruments you cannot access until
it's not that you cannot access them, but because of and I'm going to use the technical word here, the volatility and all that is the ups and downs of some of these instruments. For example, equities. If you invest on the Nigerian stock market, the value of investments go up as well as down. Right? Now, if you put it at the top of the market and it goes down, then you've lost a bit of capital. Now, if you're doing it over the long term, what you will find is that over the long term, you will likely get your money back unless the institution you invested in sort of goes out of business. But if you need that money over a short term, then you either use a savings account or you use something called a money market fund. Now, the money market fund actually pays interest higher than what you will get in a savings account. right now, for example, in treasury bills are yielding around about 11.5–12%. That is what money market funds track. Right? They track treasury bills because they invest in treasury bills, they invest in bank placements, they invest in commercial papers. Now, a lot of these may say technical words, but then that's why we say use a professional manager to actually do it.
Well, let me quickly ask you then, if I put 100,000 naira into money market and it goes into treasury bill, in 6 months' time, what should I expect if I say, I'm just putting it there for 6 months and then I'll come back and get it?
I'll give you an example. The FBN money market fund over the last 6 months has averaged 11.5%. So what you would have got over that period is half of 11.5%. So we're talking about 5.75, right? So what you would, and the fund pays out every quarter. You could have decided that every quarter it pays out, you want to reinvest so that in 6 months you get your full money back, or you could have decided that what you want is that money paid out to you every 3 months.
You're an accountant. Can you do the mathematics for me? If I put in
100,000 naira over 6 months would have given you 5.75, another 5,750 naira.
Okay.
Right now, if you did it over 1 year, 11.5.
5,000 naira.
Sorry?
5,000 naira.
It looks small, but
it is small.
But at least you get your money back.
You get your money back, right?
You still get a little
if you want to take higher risk, right, then you will get higher rewards, but also be prepared to lose a bit of your capital. Which is why we have different products for different segments: the low risk, the medium risk, and the high risk.
Okay. Tell us about mutual funds. What are those?
A mutual fund is like, it's a collective, right? All of us in this room can bring our heads together and put the money and say, somebody go and invest it. So what a mutual fund is a collective investment scheme that pools money. It's almost like a susu ajo, but it's a legal susu ajo. Now you have risk with a susu and ajo that the one person who's taking the money might not come back. In this particular case, in mutual funds, they are regulated by the Securities and Exchange Commission. Right? You cannot create a mutual fund without it being regulated. Now, FBN Capital Asset Management has 3. All 3 of them are regulated by the Securities and Exchange Commission. And all we do is for each of the products, we pool money from various investors, from the guy who has 5,000 naira to the guy who even has 500 million naira. They all go into the same pot, and the professional manager goes out there and invests in these various instruments. The money market fund, for example, as I said, invests in treasury bills, bank placements. The FBN fixed income fund invests in federal government bonds, state government bonds, corporate bonds, and money market instruments. And then the FBN Heritage Fund blends all of these together and also goes into the equity market and invests.
So what's the longest and the shortest period that I can put money in mutual funds?
In the money market fund, the minimum is 30 days, right? It's almost like a bank account. Once you've done the first 30 days, then you can go in and come out whenever you want, right? It starts at a minimum of 5,000 naira, right? Going up to 90 days, which is the FBN fixed income fund, and then going up to the Heritage Fund, which is 90 days. So the minimum period is 30 days. The maximum is open to you, right? But all we actually try to tell people is save, 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 right? The future you might think will take care of itself, but you also need to take care of the future for yourself, save in any of these products.
How can I tell which mutual fund will suit me?
You need to determine, and it is not only about the person who's going to manage it for you, you need to determine what your investment horizon is. Just like Coyote has asked, right, what is the minimum period? If you say, I want to invest for a minimum of 30 days, then you can use those short-term products, like the FBN Money Market Fund. If you want to invest for a longer period and you can withstand the volatility, not that you'll be checking the price every day, and just because it's gone up and it's gone down, then you start panicking. No, the markets go up
like you do with the stock exchange.
Like you do with the stock exchange. That's the thing. But you see, this is the thing. Everybody can see the price of something, but does everybody know the value? And that is what professional fund managers do. They analyze and look at the value of instruments, and they invest over a longer period of time. So in determining which one is suitable for you, you need to determine what your investment horizon is: short-term, medium-term, or long-term.
So do you provide updates, and can I easily track my investments and see how it's growing and be smiling every day?
Every month
when you put my interest in?
Yes, every month to every unit holder, we send out a fact sheet that shows you, if you're subscribed to all three, you get 3 fact sheets. If you're subscribed to one, you get 1 fact sheet. But that doesn't even mean you don't have access to all the others. They're on the FBN Capital website anyway, you can access it. So we send out fact sheets